In the world of Bitcoin, we see big leverage numbers all the time. But you almost never see it this concentrated, this fragile. We're talking about more than $75 million in leverage positions, just stacked up, waiting to get knocked over.
So let's just look at that number, $75.96 million. What's wild is that all of this capital was trapped in an incredibly narrow price window. This wasn't just money at risk. It was basically a powder keg, creating this magnetic pull for a massive volatility event.
But here's the really fascinating part. It's not just about how big the number got. The craziest thing is that a full 50% of this leverage, we're talking tens of millions of dollars, piled in after the price had already started to drop. That move right there set the stage for a dramatic and, frankly, a predictable wipeout.
So how in the world does a wall of money that big get completely vaporized in less than 2 hours? Well, we're going to show you exactly how it happened step by step.
All right, first, let's set the scene. To really get why everything collapsed, you have to see the force that was pulling things in the other direction. There was this huge wall of short positions that created a very obvious target on the upside.
And this chart just paints the perfect picture of that tension. You see that big, bright yellow band up top? That's millions and millions of dollars betting that the price is going to go down. If the price had punched up to that $92,000 level, it would have triggered a massive short squeeze.
So you have to understand, this pool of money wasn't just background noise. No, it was a clear, shining target for price. It was literally pulling the market upwards.
But that was only half the story, right? There was an equal and opposite force brewing. Let's flip over to the other side of the trade and see how a defensive wall of long positions was getting built up, and fast.
And here you go. You can see another one of those dense, yellow clusters taking shape. But this one's below the current price, right around $90,000. These are the longs, the traders betting on a price increase, and they were digging in, trying to establish a floor. It was basically a high-stakes standoff.
Okay, now this is where the trap was spring-loaded. Look at the difference between these two snapshots. After a little price dip, the longs didn't get scared and run. No way. They doubled down, aggressively adding to their positions. They reinforced that $90,000 wall and jacked up the total leverage in the system by over $25 million.
What this did was create this incredibly fragile balance. You have this huge pile of shorts aiming for lower prices, and now an even bigger, more desperate pile of longs trying to defend their turf. Something had to break.
And oh, it did. That standoff was about to get resolved in the most brutal way you can imagine. Let's watch the main event.
So here it is, the before shot one last time. The market is just coiled like a spring, with almost $76 million hanging in the balance. Now, in a situation like this, the market is almost always going to take the path of least resistance. It's going to hunt for the biggest and, this is key, the closest pool of money.
And with that massive wall of longs built so close to the price, well, their fate was pretty much sealed.
The total leverage in the system just craters, falling from a peak of nearly $76 million all the way down to $23.5 million. That is a nearly 70% flush of leveraged longs in just a few minutes. So to put a final number on it, in one single swift move, over $50 million in long positions were completely erased.
So what's the big lesson here? What's the takeaway from watching $50 million just vanish into thin air? Well, first, you got to realize this wasn't about news. This wasn't some story driving the price. This was a purely mechanical market event. Think of the market as a magnet for liquidity. It will always hunt down the closest, biggest pools of money to fix these imbalances. The size of the leverage mattered, sure, but how close it was to the price, that was the real red flag.
And that's really the most important insight here. If you want to understand how these markets really work, you can't just track the size of the bets. You have to track how close they are to getting wiped out. In a leveraged market, proximity is everything.
So when you boil it all down, what's the ultimate lesson from this $75 million trap? It's simple. When the news is confusing, when the charts look like a mess, just follow the liquidity. That's where you'll find the truth.